Less than pay class equals data end equals 454 data start equals 76 greater than. Hey everyone, let's talk about something that's been shaking up the financial world lately. Bitcoin. If you've been anywhere near the news this week, you've probably heard the buzz. Wall Street is bracing itself as Bitcoin and the wider crypto market stir up what's being called an existential threat to the traditional financial system. And honestly, they're not exaggerating. Less than subclass equals data end equals 948, data start equals 456 greater than. This week has been wild. Bitcoin prices have been swinging back and forth like crazy. And a lot of that comes down to political tensions and upcoming legislation that could change the game entirely. With former President Donald Trump back in the spotlight, pushing for aggressive new tariffs and a dramatic stance on digital assets, markets are reacting. And here's the twist. He's not against Bitcoin. In fact, his administration is embracing it, and that's got the banking industry sweating. Less than P class equals data end equals 1597, data start equals 950 greater than. Now let's zoom in on what's causing the panic. There's a massive push in Congress to pass new crypto legislation, especially around stablecoins. These are cryptocurrencies pegged to the US dollar, and they're becoming seriously attractive alternatives to traditional savings accounts. Some versions of the bill would allow interest payments to stablecoin holders. That might not sound like a big deal at first, but think about it. Why keep your money in a bank when you can earn higher interest through crypto? That's the kind of shift that could pull billions, if not trillions, out of traditional banking and into the hands of crypto platforms. Less than P class equals data end equals 2025. Data start equals 1,599 greater than. And it's not just the small guys who are watching. BlackRock, Bank of America, even PayPal. They're all eyeing the stablecoin space, either launching their own or preparing to dive in if these laws pass. Tether, the largest stablecoin, reportedly pulled in $13 billion in profit last year just from the assets it holds to back its currency. That's not pocket change. It's a sign that the business model works, and it works well. Less than P class equals data end equals 2419 data start equals 2027 greater than. Wall Street knows it. And they're scared. Experts are calling this an existential threat, not just to banks, but to the broader financial system. If stablecoins become mainstream, traditional banks could lose their monopoly on consumer deposits. And with legislation potentially allowing these crypto assets to act like checking accounts that pay interest, yeah, that's a revolution in motion. Less than P class equals data end equals 2748. Data start equals 2421 greater than. At the same time, there are concerns. What happens if a stablecoin platform fails? Unlike banks, these platforms don't always offer the same protections. So while the opportunity is huge, so is the risk. Regulators are rushing to find a balance, encouraging innovation without opening the floodgates to another financial crisis. Less than pop class equals data end equals 3114, data start equals 2750 greater than. In the end, whether you're deep into crypto or just watching from the sidelines, this moment matters. The decisions being made in Congress over the next few months could shape the future of finance. For real. So stay sharp, stay informed, and don't blink. Because Bitcoin isn't just a digital coin anymore. It's becoming the center of a global financial power shift. Stay subscribed for more videos.